And it's my pleasure to welcome back to the show Rob Lees from Mortgage Choice. And this week we're going to be chatting about what's looming us all by the end of the week is the end of financial year.
How exciting. Isn't it exciting? I mean, there's a New Year's Eve coming up next week and all that sort of thing.
It can only be exciting for finance people.
I've actually heard of accountants that do have New Year's Eve parties.
Yeah.
So,
yeah.
And there's now a thing called end of financial year parties
that's right.
in accounting firms.
Yeah.
I'm not quite sure what they're celebrating
I'm not sure
at that
what there
time.
is to celebrate.
Very
anyway.
little
I
from my
think
point
it's
of view.
more so that getting, and I guess that's what you're going to talk about, Rob, is getting all those ducks in a row. And so you kind of get to the end of 30 June and you go, I can
There
relax.
are a bunch of things that need to be done. There's a whole lot of them here. I'm not going to run through the checklist because there's a lot of things here. I suppose just to highlight a couple of things that are worth mentioning. If you own a business and it's in a family trust structure, you do need to work out your trust distributions before the 30th of June and prepare a minute. Otherwise, well, you're going to be in trouble. So that's very important to do that.
That's only if your family trust has actually made money.
Yes, that's right. You don't need to worry about if you've run a loss. Thanks for that. That's very positive.
We are the business show.
That's right. So we hope you are running at a profit. There's also things like directors' loans that if you've had a director's loan within a company structure, that needs to be repaid before the 30th of June. Otherwise, you need to have a loan agreement and charge interest and all that sort of thing. Although you might want to discuss with your accountant a strategy where you could recycle the debt. Okay, so this is an advice. You need to talk to your accountant, but you can recycle the debt. Had a conversation with a client about that during the week, said talk to your accountant so you can repay it and take it back again. But there's things like that still need to be sorted out before the 30th of June. Again, for businesses, if you're wanting to minimise your tax liability, you need to, one of those strategies is to make superannuation contributions. You can contribute up to a total of $25,000 per year, and that would minimise your tax liability because those super contributions are taxed at 15%, and hopefully you're being taxed at a much higher rate and you're going to make a big saving. So there's a whole bunch of things like that you need to do before the 30th of June, but I'm sure that most people will have received that checklist from their accountants. The thing I really want to talk about too, like I've just got down there too, end of financial year sales. Gee, they have really been irritating me. And it's sort of like, it's kind of like, it's
Are you
going
to be the fun police right here?
Well, it depends how you're going to interpret
because
that.
a lot of them are misleading.
Well, they are, and it's this thing, if the fun police means don't go out shopping, and you like to go out shopping, I guess I'm the fun police. But all these marketing strategies, end of financial year sale, get out and spend it before the 30th of June and you'll have a tax deduction. You may not have a tax deduction. Depends, number one, if it's got business use. And number two, it depends whether you're really going to use the thing or not.
Whether you need it or not.
It's
don't borrow to get a tax deduction.
If it's going to sit in the shelf or in the cupboard and you're not going to use it.
Don't even spend just to get a tax deduction.
I suppose while there is that opportunity to the instant $20,000 capital expenditure write-off, don't spend the money unless you really need.
Unless you need it. Because that's the key, isn't it? If you were in the market, say, for a new photocopier or something like that, you absolutely consider doing that before the end of the year, but not just for the sake of a sale or because you're going to save $2,000 in a sale.
No.
And also be careful that the sales are normally equipment that is outdated or on the way out anyway. So you might not be saving yourself anything anyway, because in 6 months' time you can't get toner for it, you can't get it serviced, and all of those things.
Yeah, so I suppose my message there is just exercise caution. Don't get carried away with some of these sales. I just can't believe the number of businesses and retailers that are getting on this bandwagon of end of financial year sale.
But even not just retailers. I saw, I think it was, I can't remember which service company it was, but, they're having an end of financial year sale. I don't think it's really necessary.
Yep.
I want to just say, has anybody seen the word EFS? in a dictionary? Like, when did that become a word?
It's in my emoji dictionary.
That's a very good question.
I reckon that was about 3 or 4 years ago, Karen.
And now everyone is onto it. So
I actually think it started with cars.
I think it did, yeah.
I think it was the car dealerships that started with it.
A lot of car dealerships are promoting that as well. I question as to whether they really have such great deals right now. Having said that, I bought a couple of cars for my business, so that's just that we were doing that. So it's just how it is. But I think the message is just exercise caution.
Yeah, buy what you need.
Exercise caution, though, buying
I would have. It just. I didn't buy it for me. It was for staff. So, but it was just the timing. It's just how it was.
But that's your point, isn't it? But
they're giving me looks here, people.
No, look, I've got your back, Rob. Don't worry about that.
Thank you, Peter.
I think the point is that you were. It was something that the business needed, and so there is opportunity to take advantage of the fact that
it was a good time to do it. It wasn't really June that made it, although there is an advantage in that I get to depreciate those vehicles for the year. But honestly, it wasn't really the motivation. So again, that could be a good strategy for some people. Wasn't in my case.
Yeah.
Did you buy from an EFS sale?
I'm not sure. All these tough questions. I'm not sure, Karen, because I actually didn't buy them. So the staff people who bought them went out and
they picked them themselves.
Yeah, that's right.
We're all working in the wrong
place. I think
place.
you'll notice, Peter, your neighbour's got a new car. That our financial planner. Keep your eyes open.
I did hear, because I went crook at my husband for parking in your spot the other day, and then Christy did say that there was a day that someone was getting a new car.
Watch out for the new car. But there's some other things I wanted to get on to.
Yep. What else besides the fact
if we can
don't
move
spend
on from that. Now, there's some big changes coming on the 1st of July. So a whole lot of
so once you've spent all your money,
changes are coming into effect. So big one that we've talked about before is the comprehensive credit reporting system. That is, we haven't seen it yet, but it's going to be, it seems like it's going to be a big change because up till now, all the credit reporting has been on a negative basis. So only if you've defaulted is it recorded, and no positive reporting is included. So from the 1st of July, the banks have to share credit information within the credit reporting system. So hopefully it's going to provide a bit more positive information when it comes to credit reports that are downloaded when loan applications are submitted. But it also is going to have a little more negative information about it that will offset a bit of that positive. So the warning is it's very, very, very important from the 1st of July that you keep your accounts in order. And it's even things like credit cards, that the longer you've had a credit facility, the better, rather than short-term ones. So if you do things like transferring balances and all that sort of thing, that is going to show up on your credit report, all these short-term credit facilities that you might have. So just exercise some care with that.
But will it also have some balance then?
Well,
so just because there's one negative, like at the moment it's like, you've got your $400 Optus bill from 4 years ago or something, and suddenly that means you're not going to get a housing loan.
Yeah, well,
whereas this will provide you might have that, but
case.
For the next 4 years you've had all of this good positive.
Yep. We hope that'll be the case. So it hopefully should be more balanced. But I think it does mean that we have to exercise all the more care, because there's a lot of things that you could potentially hide before if the conduct on your accounts weren't so good, if it didn't get defaulted, whereas it's all going to be seen very, very clear in these reports.
And it's important to know that they're all accounts too, isn't it,
all
Rob?
accounts,
like, even your utilities,
absolutely,
those things are going to be reported if you're 30, 60, 90 days overdue.
Your everyday accounts, so that don't let it go into $1 in overdraft or whatever. Those sorts of things are very, very important.
Yeah.
So just to be aware of that. New tax rates are coming in 1st of July, so we'll get another $5 in our pockets perhaps.
Ooh.
So it's not much, but anyway. So you can actually earn up to $90,000
Won't
from
even
the
buy
1st
your
of
coffee
July.
these days, $5.
That's right, per year that is, no, per week. And it's only 32.5 cents in the dollar up to $90,000, which is pretty good going forward. The big one that I uncovered when I was doing some research this week was the, which I knew was there, it came into effect last year, was the First Home Saver Super Scheme. Okay, so from the budget in May 2017, you were able to contribute up to $15,000 a year into your super fund as a salary sacrifice or a concessional contribution, and then from the 1st of July you can draw that money back out plus the earnings. So that's changing from the 1st of July. You can actually access the money from the 1st of July. But the thing I was looking at...
Did you need to be in the scheme prior to?
So you need to contribute during the year ending June 17. Now, the thing on this is, I was looking at this and I realised I actually contacted 3 clients on the weekend and realised they've already got their savings to buy a house, first-time buyers. If they could make a $15,000 contribution before the end of this week, and make another contribution next week, and then the week after, they can draw out that $30,000. Now, over 2 years with those clients, it's going to save them well over $10,000 in tax. So one of these clients, I calculate, it's actually $11,555 in tax.
Wow.
By using that money he's got now, so he's a business, making a contribution.
Then drawing it out.
This week, making another one next week.
Yep.
And then draw it out. So this is really, really significant. And one of those clients I called was my daughter. Okay? And what I realised with this, which I didn't understand, I didn't realise at the time, and this is the thing that's different about this, is that if you have, so it's a couple, and one of those members of the couple have owned a property and the other one hasn't, the one who hasn't owned a property before can still participate in this. So my son-in-law has owned a property before, and but my daughter hasn't. So she can make the contributions, and they have a business, so he can make that on her behalf and so on, and they can save quite a bit of money. So this is a really good strategy. So
fantastic.
People need to get onto that.
Dad was really happy about finding that.
Yeah.
Yeah, well, that's, so maybe they don't come to me for an extra deposit. So I've just
I
saved...
can see where your strategy
I've
was
saved
going.
them $11,000 in tax,
You've
which
just
is pretty
saved them
cool.
money, therefore your job is done.
Well, they owe me, really, don't
Yeah,
they?
that's right. 100%.
Anyway, look, there's other things as well, but that'll do us for now because it's right on 1 o'clock.
Fantastic. Thank you so much, Rob. As always, very entertaining and always really valuable information. So if anyone did want to have a chat with you off air around any of your discussions today.
Yep, just call the Blaxland office, 4739-9749, or just Google Rob Lees, and I actually come up. And you can find all my
On page
contact
1.
numbers there. Yeah, how about